Welcome back to Sacramento Smooth Jazz. This is our Clear Talk Financial segment where we spend 8 to 10 minutes with you to give you some insight as it relates to finance. And of course, we're talking with none other than President and CEO of Fortis Insurance Solutions, Mr. John Nunes. He's been talking about Roth conversions, and this is part 3 of the Roth conversion conversation. The missing question: where will income come from? Now, Roth conversion may address taxes, but retirement planning must also address dependable income. And John Nunes is able to explain that to us. So, John, welcome back. And thank you for being here to talk to our listeners and give them some insight. Okay, so thank you for coming back again. I really am grateful.
Absolutely. It's always a pleasure, Michael.
Now, John, in parts 1 and 2, you had explained what a Roth conversion is, when it may help and when it may not help. And today, we're asking a bigger question. Where will the income come from? Why end the series there?
Because, Michael, retirement is not lived on account statements. It's actually lived through income. And even though a Roth conversion may affect taxes, it doesn't automatically create a paycheck. And that's the main thing people need to understand. So before someone actually makes a conversion, do a rollover, or even an annuity decision, what they need to understand is how their retirement dollars are going to become dependable income.
Okay. So are you separating tax planning from income planning?
Exactly. I'm definitely doing that because a Roth conversion answers one question: should I pay taxes now or later? But when you're talking about retirement income, especially when it comes to retirement income planning, that answer is a totally different question. And that question is, how will I create dependable income that's going to last for life? Now, both of those questions do matter, Michael, but they're not the same. So if somebody focuses on taxes, it's possible that they may miss even the bigger issue, which is their cash flow.
Okay. So why is the paycheck issue so important? Some would be asking.
Well, because once your work stops, Michael, so does that paycheck. And a paycheck has to come from somewhere, right? So Social Security may cover a part of it. A pension may cover a part of it for some people, but for many retirees, the rest has to come from savings, your IRAs, maybe your 401ks. You might have a brokerage account or even an insurance-based income strategy. So the question is whether those assets are perfectly positioned to create income in a way that's going to be reliable, have tax awareness, and also sustainability. Okay.
So real simply here, what should an income plan measure?
Well, the first thing it should do, it should measure the monthly income that somebody wants. It also should measure the reliable income sources that they already have. Potentially, there could be a gap that remains. And we talked about that earlier, called the retirement gap. How much of their income may be taxable? How the market itself could have a downturn. How is that going to affect your withdrawals? How much money should actually stay liquid? And the last thing here is whether any portion should be positioned for protected life income. That's how you move from one pile of accounts to an actual retirement strategy.
Okay. So you mentioned, though, protected income strategies. So where can annuities fit into that conversation?
Well, annuities may be worth evaluating if your goal is to create a dependable retirement paycheck. Now, for example, a fixed index annuity with an income rider, that may be considered for a portion of assets when someone has principal protection from direct market loss, future income potential, and a lifetime income guarantee. But what it doesn't do, it doesn't replace tax planning. So it solves a different problem: longevity risk and income reliability.
Now, how do you bring all of this together for someone?
Well, you have to start with the idea that every dollar needs a job. Now, some of your retirement dollars may need to provide income, and we touched on that. Some may need to stay liquid in case you need emergency fund to take care of your everyday expenses. Now, you might need some money that can actually grow for you, and you might need some that actually going to protect against risk. And in some cases, maybe even have some set aside for legacy. But when you start looking at your money that way, Roth conversion is no longer a random transaction, Michael. What it does, it becomes one possible tool inside an entire coordinated retirement plan.
Ladies and gentlemen, I'm speaking with John Nunes. He's the president and CEO of Fortis Insurance Solutions, and he is talking with us today on the Clear Talk segment financial series about Roth conversions. Now, John, if someone is listening, and they're thinking about a Roth conversion, what should they review before making a decision?
Well, the first thing they need to do, and I think this is the most important, is they should review their current tax bracket, any future income expectations, potential RMD exposure, their Medicare impact, or how the tax bill is going to be paid, income needs and liquidity, and whether they have a dependable income floor. Now, the conversion shouldn't be evaluated by itself. It needs to be evaluated against the total retirement picture.
You're giving us a lot of information. So what's the next best step for someone?
My recommendation, Michael, is everyone needs to get educated before they act. So what they can do is they can visit our website at fortisinsuranceSolutions.com/before you convert. And they can request the free guide that we put together. That's basically answers all of your Roth conversion questions. It'll walk you through when it's going to help you, when it may not help you, why your income goals matter. All of that is within that plan. But if you want to go deeper, my suggestion, Michael, is to have your listeners schedule a retirement income strategy review with me, because the goal here is it's simple. We need to make major retirement decisions with clarity and not assumptions.
Now, what's the phone number to reach you if they want to call you?
They can reach me, Michael, at 1-800-900-3150. That's 1-800-900-3150.
Okay, John, thank you again for just giving us some insight into the Roth conversion world so we can make the right decisions instead of the wrong one. So thank you again. I really am grateful that you're here.
My pleasure, Michael.
And ladies and gentlemen, also is that if you're on our website right now streaming us, sacsmoothjazz.fm, if you scroll down, you will see the Roth conversion guide right there. We made it really simple for you to access that. You click on that, it will take you right over to Fortis Insurance Solutions where you can obtain the guide. So go right down to our website, sacsmoothjazz.fm. Scroll down, you'll see a picture of the Roth conversion guide. Okay, so let's get back to more music. This is Sacramento Smooth Jazz, your escape from the noise.